Hey, what's happening? Tim with Nomad Trading. Today I want to do something a little bit different. I want to talk about a short pattern. I want to talk about kind of the opposite of what I've been talking about in the past couple videos. We've talked about long setups. We've talked about bullish pennants, and I want to talk about the opposite of that, a bearish pennant. We got a good example of that today, so I thought that I would bring that up and show that as an example. So without further ado, we're going to jump over into my computer, but first, I need you to hit the thumbs up. I need you to subscribe if you have not already and join Nomad Nation. I need you to comment down below. Let me know what you like about the video. Let me know what positions you took today, if you made any money, things like that. Yeah, just comment. Helps the YouTube algorithm push my stuff out. Helps me support to support my family. Sorry, I got lost in my words there. You guys and the algorithm, it helps support my family. So the more views, the better. That's awesome now that I'm actually making money with YouTube. So thank you so much for the support. Let's jump over to my computer and talk about a bearish setup for a change. Okay, so this is SLS. I'm going to make this video kind of short. I just saw this and was kind of flipping through looking at stocks from today, and I saw this and I thought, hey, that's a good example of the opposite of what I've been talking about the other day. So a bearish pennant. So let's take a look at this. Can you see what I'm talking about? It's the opposite. If we were looking at a bull pennant like we have been the last few days, we would see a flagpole come up, and then we would see it consolidate, and then we would see it continue up. Okay. Now what we're going to see here is this would be the flagpole. If you think about it upside down and going down, for those of you that love to short, this is a great example. So let's take our handy dandy drawing tool, our trend line tool. So if you think about it upside down, this would be your pole. Your pole going up, but it's going down in this case. Then we would look and see the pennant here, and we would draw our trend line as it gets tighter and tighter consolidation. It's not perfect, by the way, but it never is. By the way, I've had people talk about in the comments about where do you draw your trend line? Is it just at the wicks? Is it on the bodies of the candles? Sometimes, just remember this, okay? This is the most important thing. You're going to draw the lines where they make sense, because there actually is no right or wrong. There's no perfect trend line. Trend line trading and trend lines themselves are not perfect. They're going to be flawed. They're not going to be exact. They are not exact. It's not an exact science. It's just the best idea of where it is. That's actually where I would say we would draw it. There's no, like I said, there's no perfect science to it, but I would say a good spot to draw it would be right in there. You can see that the point is, what we're trying to get at, the most important thing, is that we have somewhat of a pattern here. We see a flagpole, we see it coming down pretty good and strong, and then we see it bounce up, and what we're seeing is consolidation that gets tighter and tighter, tighter and tighter, tighter consolidation, and then it breaks that line, and then it kind of comes back up and tests that line a little bit. I would have rather it got rejected right there when it tested the line, but it did pop through it a little bit and get rejected by the 50 moving average, which is this purplish bluish line we got going on right here. But the point is, it's a pattern that has played out, and we can see that here. So that's all that matters. We're just trying to predict the best we can based on the stock and the movement of it, what it's going to do next. So in this case right here, we got tighter and tighter consolidation as it forms somewhat of a pennant flag or a pennant here. And then as it breaks that, it did kind of test it, but then as it breaks it again, boom, you're going short. That's your spot to go short, because the odds are that we're going to continue down. And what do? We continue down. It's not letting me draw my trend lines, of course, because E-Trade loves to be a pain in the butt when it comes to doing what I want it to do. But anyway, oh, there we go. So that's how it would work. You got your pole, and upside down. That's a bullish pennant, but upside down in a bearish pennant. You got your pole, and you get your pennant forming as it gets tighter and tighter consolidation, and then you're looking for that break. And when you get that break, that's when you go short. So you take that short, look to get your profit, and take some of your profit the first chance you get when it looks like it could bounce. So I would have been taking some or all of my profit right here. But just look at that. That's a great amount of profit there. You're looking at going short somewhere around 10.70 or so, maybe $11 if you're good. And then your real first spot to cover wouldn't be until 8.50 or so, when you see that first green and that first possible bounce situation. Because if it started bouncing way up here, you don't want that. You're losing all your profit. So as soon as you see it starting to bounce and see a little bit of resistance there, support, looks like it could get a spot where it could bounce, then you take some of your profit, or all your profit if you're conservative, some of your profit if you're a little less conservative, none of your profit if you're super aggressive and you want to see how far it can go. But anyway, it dropped all the way down from that point, almost another $1. So that's pretty good. It's a nice higher odd setup. Reverse bull pennant. So you got a bearish pennant. Played out nicely. I'll just see if I can find another good setup or something that would be a good example. Even this, you want to look for trend lines. Can really be your friend as a new trader, especially. So you want to look for the breaks of the trend lines. Like if you were to draw a trend line here, for instance, you could draw a trend line at the tops of these candles, hitting the top of the body of that candle, and from the peak of this candle down, and then when it breaks that downtrend, because you got a nice downtrend here that it's following, or you could say that this is a flag. This would be an example of a flag, a bull flag, because you have your flag pole here. So you got your flag pole, and then you have your flag right here. A pennant is one that comes more to a point. The flag would be more like this, where it's got your top and your bottom of the flag, and then once it breaks past that, that's your spot to go long. So you would go long right here as it broke out of that flag pattern. And then it had a nice move from 410 or so to all the way to, you could have taken profit about 460. Nice 50 cent per share bullish move right there. And the spot to take your trade would be right here when it breaks out. Whenever you're a new trader, you want to find patterns. You want to be able to recognize them in real time, and then you want to make sure that you get confirmation before you take that trade. And you want to sit on your hands the rest of the time, because if you're just taking trades willy-nilly and you're not seeing the patterns develop, that's when you really get yourself in trouble. The reason that I lost money for several years before this year was because of a lack of discipline. After the first year, I really felt like I had a handle on what was going on and what I was looking at in the stock market. But then it becomes a matter of discipline and emotions, because if you can't handle your emotions and you can't be a disciplined trader, you end up taking trades that are not high odds setups. You end up taking stabs at stuff because you're just bored. And that's when you really get in trouble. That's when I've taken my losses. That's when I've turned my winning years to losing years, just out of boredom. You're sitting there on your hands and you're like, oh man, right here where this is choppy, and you think, oh, it could go up. It looks like it's found a bottom here, so I'm going to take a long trade. Well, there's not really a good pattern there. So the next thing you know, it reverses and it goes down, and you're the bag holder. So don't just take trades because you're bored. Only take trades when you have a pattern that you can see and the pattern has developed. And once that's developed and you've seen the stock break out of that pattern and it's following through with what your thesis is on the plan for the stock, then you take the trade. And you only take that when you have a price target in mind, you have some ideas on where you're going to get out at. You need to be thinking about all these things in real time, very quickly, and not letting your emotions get involved. So that way, when the trade happens and it develops, you've got a plan on when you're going to get out and what you're going to do if it doesn't go your way, where you're gonna cut loss at. You don't want to become a bag holder. Holding and hoping is not a strategy. Anyway, just thought that would help to kind of see the other side of things, kind of see something that's not bullish and see a more bearish side to things that you can look for. Thanks for watching. Make sure you like, subscribe, all that wonderful YouTube stuff for the algorithm. God bless. If you made it this far, first of all, I just want to say I love you. You must have liked the video, so make sure you give me that thumbs up, subscribe, notifications on, of course, and then click on one of my videos to the side. If the YouTube algorithm is doing its job, there should be one over there. If not, just go to my page and check it out. Thanks for watching. Peace.